Okay, but it's time now for our Monday special Midcap Mania, and who else but Nigel D'Souza joins us now. The stock on his radar today, well, let him tell you about the stock itself. Nigel.
Hi Sonia, in fact the stock I'm going to talk about is Mangalam Cement. So that stock in fact is in focus. I was looking at the counter, and in fact normally I pick up the stocks that have been doing very well, but this time around in fact I'm looking at a stock that has corrected a good 35% if you look at it in the last 5 to 6 months approximately. If you look at it in the last 1 year though, the stock has bounced up by close to around 30%, so it's done fairly well. And in terms of promoter holding, normally I spot promoters, they have been buying into shares, etc. But this time around, this promoter holding is at around 27.5%. But just take a look at the promoter entities. We have Century Textiles in there, you have Kesuram Industries as well in there, and Pilani Investment as well in there. They constitute that 27.5% approximately. So if you're looking to play that entire Birla consolidation, then you need to take into account that Mangalam Cement could be, just could be, it could be one of those stocks that will take part in that consolidation. The institutions as well, they have been hiking stake in the last 1 year. Take a look at that. They have hiked stake by close to around 8%. The FIs as well have pumped up by close to around 6% just in the last 1 year. Financial performance, Q4 wasn't really great for the company. So just take a look at it. The income was higher. Margins got crushed. The EBITDA per ton as well got crushed in the last quarter, while profitability as well took a hit of close to around 60% approximately. In the last 1 year though, their top line jumped up by close to around 30%. If you pull up the FI15 versus the FI14 performance, top line jumped up a good 30%. The operating margins as well, they were steady at around that 9.5%. But the profitability took a hit because capacity expansions came on stream and finance costs ballooned up, went up by nearly around 300%. So on the back of that, that really took away any kind of profits. The positives though, going ahead, the EV per ton is not even $50 per ton. So that valuation wise quite attractive. There could be a potential Birla consolidation. If not today, tomorrow we talk about buying Century Textiles, buying Kesuram Industries for the coming years, and maybe Mangalam Cement as well could be part of that. Capacity expansions as well will come on stream, and they'll be adding close to around 500,000 tons in the next 1 year. So on the back of that, those are all the positives that I was spotting in the counter. The risk though, they have no exposure to South India. All the exposures in North India, so that could be a risk given that prices in South India have been steady, and otherwise pan-India prices have been falling. The last EBITDA per ton was not even 350 rupees per ton. On a year-on-year basis, it's showing some improvement, but 350 rupees per ton isn't great by any stretch of imagination. And current demand as well as pricing, it has been fairly weak. So on the back of that, those are some of the negatives. But watch out for the stock. Big factor, EV per ton of around $50 per ton. That's a sharp discount to the replacement cost of around $120, $130 per ton. Back to both of you.
Well, that does sound, very attractive. Thanks, Nigel, for taking us through that.